Today's our guest is Andrew Leedom from Storage Stewardship. Welcome, Andrew.
Hi, Rama.
Yeah, nice to meet you, Andrew. Thank you very
Yes, you
much for
too.
thank you for joining. A little bit about Andrew. Andrew is a husband and father of four from Chesapeake, Virginia. He earned his master's degree in civil engineering and practiced as a structural engineer for 12 years before stepping away from engineering to focus on commercial real estate investing full time. He owns three self storage facilities and has partnered with Community Investment Group to start their self storage division. CIG is a company that primarily focuses on multifamily assets but is also pursuing self storage and hotel conversion projects. So, with that, Andrew, you want to add anything to your background?
No, I think uh, that's a good summary.
Okay, awesome. So, what made you decide to invest in self storage and quitting your, civil engineering and structural engineering role?
Yeah, I was so I've been involved in investing in real estate for a number of years since 2015 was when I started. That was when I was still full-time in engineering and just started with your small residential multifamily, just a duplex, and then picked up another duplex and a triplex, and um, caught the real estate bug. And so with that, I mean, the strategy was working fine and moving in the right direction, but just as I was evaluating just how long it would take to get where I wanted to go, um, it was going to be a while. And so that's when I knew several friends that were doing things in the commercial space, and started just with podcasts and getting to know folks and how the commercial space works. Just the power of the valuation within the commercial space, with being able to really control the value through the net operating income, and being able to, as you increase the income, decrease your expenses, really control the outcome and the growth of the value of an asset a lot more than you can in the residential space. In the residential space, if you could put $1 million into a house, but it's never going to get past the glass ceiling of what a 3-bedroom, 2-bath house is. But in the commercial space, if you run the business well, and it's going to be valued based on the income of the property and how well it's being run. And so you can just you can create a lot more value in the commercial space than you can in the residential side of things.
Got it. Awesome. Thank you. And so, what do you think are the key factors to successful in self storage investment?
Yeah, so as far as self-storage goes, when I decided to make the shift to commercial real estate, I evaluated self-storage, multifamily, and mobile home parks. And I like all three assets. I don't have any investment in the mobile home park space as of yet, but I am passively invested in a number of multifamily deals and invested in self-storage as well. All of those, I think, provide good recession-resistant investments that have a proven track record. But when I was looking to make the transition, the multifamily space is very institutionalized. I think you really need to have that foot in the door, have a lot of networking, have a lot of bandwidth to be able to run with those projects. Whereas the self-storage I saw as being much more manageable and able to be run remotely, and something that I could do while doing my full-time job. And so that's what led me to pursue self-storage. The other thing with self-storage is there is a portion of the market that is owned by the institutional players, the REITs, Public Storage, Extra Space, CubeSmart, Life Storage, all the big players. But really, even though the market's consolidated quite a bit in the past 5 to 10 years, there's still they still only own about 30% of the market, and there's another probably 20% that's owned by the bigger regional players. but there's still about half of the self-storage market, there's about 60,000 facilities nationwide. About half of those are still owned by your mom and pop operators who own 1 to 2 facilities. And so even though it's become a very hot asset the past 5 years, just with its track record through the past recessions, through COVID, it's performed outstanding. There's a lot of money that's been moving into the space, so it's been very competitive, but it's there's still a lot of opportunity there to work direct with owners to pick up smaller facilities that that are mom and pop owned and operated, that have a lot of management opportunity to just run them run them more smoothly, to implement technology in just the online presence and marketing. So that's why I moved in the self-storage direction, knowing it, not that it's easy, but it's a simple business model.
Got it. So, on what markets you're looking and what size of deals? And you mentioned there is opportunity to implement technologies. So, what kind of technologies you're trying to implement?
Yeah, so our market right now, primarily focused in Virginia and North Carolina, but really open to the whole Southeast, looking for the deals. When I first started, I was looking for smaller deals. Now, especially that I'm partnered with a community investment group, looking for larger deals in the, say, 40,000 to 100,000 square foot facilities, anywhere from the 2 to 20 million range as far as purchase price. Looking more for existing facilities with value add opportunity or conversion opportunities, as opposed to a full ground up development, just because of the just the length, the time horizon of the projects, as well as the risk within those ground up development. For the existing properties as well as conversions, you can get those up and running a lot more quickly and eliminate some of the risk that comes with self-storage projects. As far as the technologies that you were mentioning, there's still quite a few. You'd be surprised at how many facilities don't have an online presence. Even just as far as the Google Maps, they don't have a pin at the location, let alone a website, so obviously that's those number of facilities are decreasing every year, but there's still a lot out there that mom and pop operators that built the facility in the 70s and 80s, and it's paid off now and cash flowing plenty. So there's not really a need to really highlight those efficiencies or squeeze the value out of the project, because it's doing exactly what they want. And but as far as online rentals, being able to have a website that's functional on a mobile device where people can pull it up, rent a unit, get access to their unit on their phone, all within 5 or 10 minutes. Not even having to, the touchless rentals, not having to go to an office and sign a lease, being able to do all that via mobile device or internet is huge.
Awesome. So, what do you look when considering a self-storage investment?
Yeah, so in considering self-storage, we're looking really the most important thing is your market study. Self-storage it's a very hyper local asset class. You're really your primary market is going to be within a couple miles of that site. It's it more so when you're in the middle of a city, a large MSA, you may only have a market within 1 to 2 miles, because people aren't going to drive by other facilities to get to your facility just to store their items. They want convenience. They want it close by. In the secondary and tertiary markets, you get a little bit wider range. So you could get people coming from, 10 miles out if you're in a more rural location. But the market study is really what we look at, looking at what facilities are in the market area, what's their occupancy, what are the rental rates, and compared to the subject property that we're looking at. So is there room to raise rates? A lot of these mom and pop operators haven't raised rates in 10 years. And so they're significantly below the market when it comes to that. The other thing is as far as the value add opportunities. So is there room for expansion? If a self-storage facility is 100% occupied, it's telling you something about the market and the demand, but it's also telling you that the rates are too low. So being able to really see those opportunities, the operational efficiencies. So being able to, if somebody has a full-time manager that they're paying a salary to, where a site may be able to be managed remotely with part-time help to run the facility, that significantly cuts down on the expenses. And just to be able to implement processes, so you're auctioning off units and you're not just letting units sit there. So you may get facilities that are 100% occupied, but they're only 60% economically occupied. So only 60% of the people are paying, and you've got a bunch of units that are full of stuff that aren't being turned and aren't being rented out.
Got it. Thank you. So what are the most important considerations when underwriting a self-storage property?
So I'd say the most important things would really be to get a good feel for that supply demand of the market. So the worst case scenario would be to go and build a self-storage facility in a market that is already saturated, doesn't really need the demand. So if you add, say, 100,000 square feet to a market that's already meeting the supply but doesn't need more, then it puts pressure on the entire market and kind of hurts everybody. So being able to really look at the market and get a gauge for that demand of what are the other sites in the area, is everybody full and busting at the seams, then that's a great scenario to be in, because there's a high demand. But if your site is 70% full and everybody in the market is 70% full, then in your underwriting, you can't assume that you can get it up to the 85 or 90% occupancy. You can if everybody's 100% full and you're 50% full, then that's a safe assumption that by operating it correctly, you can get it up to where it needs to be.
That's a very good point. Yeah, thank you for sharing that.
Yeah.
So what are some common sources of financing for self-storage properties?
So self-storage, there's a lot of different options. You've obviously got conventional financing, and banks have really opened up the past 5 to 10 years to the whole asset class of self-storage. Just with how well it's performed, the default rate is considerably lower than most other asset classes, including multifamily, on loans to self-storage. So banks really like the asset class. So as long as you can put together a good business plan and show the value of the project, most banks are on board with that. Local banks are good ones to work with. They're local to the project, but also the bigger banks have room for the self-storage as well. The other option, which is huge, and especially for people just getting started, is the SBA loans. Self-storage qualifies as a small business, and so you can it's applicable for the SBA loan, which allows you to get up to 85 or 90% leverage on the project. And a lot of those loans will include construction or CapEx budgets. And so that's a good option as well. And then just, you could, like I said, a lot of these projects, obviously there's the higher end stuff, but there's also projects that are, you can purchase for the same amount as a house. There a couple $100,000 can get you a small self-storage facility. So there's really a big spectrum of the asset class as a whole.
Got it. So what size of loans will get with SBA loans?
What's that?
With SBA loans, what size of loans you will get?
So the SBA program only allows each individual to have up to $5 million of SBA loan. But a lot of times you can partner with banks that will, we're working with Live Oak Bank. They're the biggest lender, SBA lender for self-storage in the country. And a project we're working on now, they basically they'll take that SBA limit up to the max, and then they'll put a supplemental loan to cover the rest of the project. So that it's possible to go higher than that $5 million limit if the bank likes the project and they're willing to do like a supplemental loan like that. But as far as the SBA, just the SBA portion, the portion that the government is guaranteeing, that's going to be a $5 million limit, and that's per individual. So if you're splitting it 50-50 with someone, and one of you already has some SBA loans, then it's the combination. So if it's just you as an individual that's guaranteeing the loan, then you have up to 5 million. If it's more than one of you, you can have multiple loans or get higher than that combined.
Got it. So would you share any of your best self-storage investing experience so far?
My best experience, it's a project I'm working on right now. I purchased, it was my first the first facility I closed on. It was actually it's a combination of a self-storage, gas station, and car wash. Wasn't looking to get in the car wash or gas station business, but the property made sense, and so I closed on that this past last October, and we've been just operating it, implementing our business plan, getting the occupancy up. So it's been on a trajectory that's continuing to go up, and we've it's been a lot of work, working through 10 years of mismanagement and a neglected property, but we've started to see that traction and turning the corner on that project.
Cool. And would you share any challenging experience also?
Yeah, I would say that some of the challenges with self-storage are, your the security is a big thing. Just trying to keep the property secure. You're part of the business that you're gonna have people trying to break in to units. So just trying to keep a handle on that, keep the security cameras, the lighting on the property, to try to deter that as much as possible. And then the second thing is just this past year has been really tough on getting good contractors, getting the work done, finding people that can do the work and that will actually do what they say they'll do. So that's been a big challenge this past year.
Yeah, how are you mitigating the second part? So mainly finding contractors and completing the work.
Yeah, that's been really tough. We've had another site that we're working on. Just it's really been just trying to be that squeaky wheel, to stay on top of the contractors. I've got a maintenance guy that's on site that, he's my primary go-to for handling the back and forth with, meeting contractors on site. But it's been getting creative, just trying to network, trying to really connect with the right people. So just, anybody that you're talking to about if I'm talking to somebody about doing landscaping, I'm going to ask them about, if they know anybody that does gutters or they know anybody that does painting, and just trying to increase that network of contractors so that for any given thing, you can have 2 to 3 contractors on call, that you're not depending on one person or one team, that, if something falls through, you've got a backup right away.
Awesome, awesome. And what is your current focus, Andrew?
Yeah, so my current focus is stabilizing the properties that I have, but the biggest project I'm working on with Community Investment Group is developing an indoor vehicle storage facility. We're converting a 60,000 square foot warehouse to indoor vehicle storage, and then building boat and RV storage in the back. So that's the big project I'm in the midst of currently.
Awesome, and good luck with that.
Yes, thank you.
And any of your personal habits that are helping you to be successful?
Yeah, I think that just getting in the habit um, of setting goals, and being consistent with checking in and having accountability for those, that you're moving in the right direction, but as well as just the waking up early, getting your day started with some personal time. I start with just prayer time in the Bible, myself, to just get myself centered on the day, then being able to kind of run through what's on the ticket for the day, and just starting each day that I can like that, so that you can hit the ground running.
Cool. And any books that impacted your life, in what way?
Yeah, I would say one of the biggest ones is the book Who Not How. I think it's Dan Sullivan is the author of that.
Yeah.
And that's one that I definitely am far from mastering, because I'm just one that my default mode is to just do everything myself. And so the premise of that book is to not ask how to do something, but ask who I need to bring into this to help me. Who's the expert, who can help me accomplish this task, instead of taking everything on myself, because we all are finite. We all are limited in what we can do individually, but when we're working together as a team, when we bring in the right people, as Jim Collins said, you've got the right people and the right seats on the bus, then you can go a lot further. So just asking that question of who, not how.
Awesome suggestion. So how can listeners can connect with you?
Yeah, they can connect with me. My email is andrew@selfstoragestewardship.com, and more than welcome to reach out on LinkedIn as well. And I'm happy to speak to any of your listeners, or anybody that's interested in self-storage or investing or passive investing. I love talking about that and helping folks in any way I can.
Awesome, and thank you very much, Andrew. Thank you for sharing your experience on self-storage space.
Yeah, absolutely. Thank you for having me on, Rama.
Sure.